Hi everyone, hope you're all doing good. So, in this video, we are going to talk about trend trading. So, we will try to understand when trend trading can backfire. We will see where most of the trend traders can lose money, and we'll try to understand where trend trading indicators will fail. So, we are going to see where exactly we are not supposed to do trend trading and where most of the trend traders can get trapped. So we will also discuss about the price action reversals of trend to range. So we will see how prices will change from trending markets to a range bound markets. And this is the precise stage where most of the traders will lose money. So we will discuss about this. And we are going to use the recent examples of HDFC Bank and SBI Bank to look at these examples. So make sure you watch the video till the end. This is a very interesting concept and it's also a very helpful concept if you are using indicators or trend trading techniques. And also click on the subscribe button, tap on the notification icon so you can receive more insightful videos and more knowledgeable trading contents just like these. So let us get started. So first let us talk a little bit about trend trading. And I think most of you are already aware of this. So most of you are already aware of what exactly is trend trading. So in case if you are not, let me explain this. So first of all, trend trading is a popular strategy and also it's a notable technique. So what trend traders would do is they try to trade the higher highs and the lower lows. So whenever the prices make consistent higher highs or whenever the prices make consistent lower lows, they will try to capture those one directional movements. Okay. A little simplification, but if you want to know about trend trading much more, or if you are new to this particular topic, make sure you check out the Google. So just go to Google and type trend trading. You'll be able to find out what exactly it is. But just to keep things simple, we are going to see where exactly we are not supposed to do trend trading, and we will see where exactly most of the traders will lose money. So to be honest, with proper trend trading strategy, one can make excellent returns from the market. All right. So if you have a good trend trading strategy, you can really reap good returns from the market. But if you have a good trend trading strategy, even if you're a good trend trader or if you're using some good trend trading methods, you need to keep in mind, the trend trading methods work only 40% of the time and they fail nearly 60% of the time. So the reason is whenever the market prices moves into sideways or range, most of the trend trading techniques does not work. All right. Yeah, so they do give you a very good way to trade the markets, but only 40% of the time they usually work because nearly 60 to 70% of the time the market prices are always in a range or sideways. Okay, so this is one of the major drawback for trend. So here is a important concept we all should keep in mind. Whether you are a trend trader or whether you are just using some kind of indicators, you need to understand this. There is a price action concept known as trend contraction, and most of the losses for traders usually happen when trend contraction takes place. Yeah, just keep in mind. So most of the people lose money whenever there is a trend contraction. So what exactly is trend contraction now? So trend contraction in the sense when prices change from trend to range or consolidation. Whenever the market prices moves from trending markets to a range bound markets or consolidation, that is where we see the trend contraction. So if you are a trend trader, then you need to understand this particular price behavior. This price action behavior is very important. And also, if you know this concept very well, if you can understand the concept of trend contraction pretty well, it will help you to protect your capital, and it will help you to avoid making unwanted losses. All right. So it's for all type of traders, whether you are a trend trader or whether you are a indicator based trader or whether you are a price action based trader. So make sure you understand trend contraction. The reason is you can avoid a lot of losses. You can avoid where most of the traders will lose money. You can avoid trading at the spot where most of the losses usually takes place for technical traders. Alright, enough of that. So let us look at how exactly trend contraction looks like. So let us look at the examples of trend contraction, and right now trend contraction is happening in both SBI as well as HDFC Bank. We are going to look at the stock prices of both HDFC as well as SBI Bank. So let us have a look. Alright, so right now I'm looking at State Bank of India 5-hour chart. So if you look at the stock prices, we can see a good example of trend to range or trend contraction is actually taking place. So I'm going to walk you through the price action here. So first of all, you can see that the stock prices are actually in a trend ever since 19th of April. So since from 19th of April till 3rd of June, the prices consistently made higher highs. You can see a very good uptrend here. You can see the stock prices, they consistently went up. We can notice that. And within this particular uptrend, we had a lot of, retracements. So retracements are what we call as a pullbacks. So we can see a lot of pullbacks over here, right? So let me change the color of the pullbacks. Let me mark them in yellow color. So that we can easily distinguish the pullbacks here. So we saw a lot of pullbacks, and every time whenever there is a pullback, the stock prices kept on climbing. In other words, whenever there is a pullback, right after the pullback, there was an upswing. There was a very good upswing, in fact. But right after the stock prices touched 430, we also had another pullback here. So once the stock prices went up to 430, we had another pullback. You can clearly notice the pullback. But right after that pullback, you can notice the prices didn't make another upswing, right? The prices didn't went up. Instead, what happened is the prices quickly went down. So this is a good example of a trend failure. So we can see the buyers have lost the momentum, right? So right after this particular pullback, unlike what happened with the previous pullback, the prices didn't went up. Instead, the market quickly changed the direction. So we can call this as the so-called trend, the momentum loss. So let us just call it as a momentum loss. So here exactly we can see a momentum loss. So right after the pullback, the prices didn't pick up. Instead, what happened is the market quickly changed the direction, which means the buyers have lost the strength. And right after this failure, right after the prices failed to make a new high, right after the prices failed to go beyond the previous high of the previous upswing, the prices are quickly changing into a kind of a range here, right? You can see a kind of a consolidation here. So this is what we call as trend contraction. So this is a good example of the so-called trend contraction. So let us write it down here. So this is a good example of a bullish trend contraction. Alright, so you can see the bulls have lost momentum, and the trend has started to move sideways. So if you are a trend trader, if you have used any of the trend trading strategies, whether it is a moving average or whether it is a Bollinger Band or whether it is whatever kind of indicator or systems, even if you have used a simple price action or pullback based trading technique, this is where you would have lost money. And when you try to trade the pullbacks from here, or when you try to use any kind of trend based trading strategy from here, you will consistently lose your money, right? So these are the type of examples, or these are the type of trend contractions you need to avoid. So if you really think about this particular setup, all the buyers who bought the stock right after this pullback, right after thinking that the prices will continue to climb up, they all have lost money. They all are trapped into the market right now. So some of them might have closed to their positions, some of them might have still they might be holding their positions. But either case, all the bulls who thought this is just another pullback have lost money, right? And at the same time, you can also notice one more thing. You can see that right from the point of bullish trend contraction, you can see the volume is consistently declining, right? So it is continuously losing the volume. You can see that clearly over here. So why do we see this? Well, it's because all the orders, right? All the trading activity is decreasing. It's contracting, right? So if you look at the previous volume, the volume was pretty high. Most of the trading was taking place very normally. But from here, you can notice a drastic decline in the volume, which means the volume is getting shallower, which means less trading activity is happening, less trades are taking place, which means we won't see much movement in the stock prices. So anyone who's trying to trade the stock over here, anyone who's trying to take position over here, they are most likely to see either they will be locked into the positions or they will see some losses, right? So this is how bullish trend contraction works. So we have seen the example of SBI. Now let us look at the example of HDFC Bank. So right now I'm looking at one day chart of HDFC Bank. So just like SBI, you can also see that HDFC Bank is making consistent higher highs. We can see a very good uptrend here, and within the uptrend we had a lot of pullbacks, very good pullbacks here and there. Multiple times the prices gave a lot of pullbacks. So right after each pullback, right after each retracement, we saw a very good upside swing, right? So we have a very good upside swing. But once the stock prices crossed above 1,500, that pullback didn't give away to another upswing. Instead, that pullback turned out to be a failure. You can clearly see here, right? So right after this upswing, right after the stock prices broke above 1,600, there was a pullback, and right after the pullback there was a strong bullish candle, but there was no follow through, right? Quickly the prices changed the direction. So quickly the market started to move downside. All right. So we see a momentum loss, and we can see all the buyers and all the trend traders are trapped here. And right after that, the prices are also started to move in a kind of a consolidation. So this is more mature example than what we saw at SBI. So here the stock prices are more likely to stay in a range for time to come. And apart from that, you can also notice the volume. So right from this point, you can see the volume has consistently declined, right? Despite a few upticks, despite a few increases here and there, most of the time, the overall trend of the volume is consistently declining. Again, which is another sign of contraction. So if you are a trend trader, if you notice something like this, if you see that right after a pullback, if the prices are not following through, if the prices are not making another upside swing, then you can expect a kind of a contraction just like this. Okay, so this is how trend contraction actually works. This is a very interesting as well as a very dangerous price behavior, because most of the traders lose money around these points. Alright, so how does trend contraction usually helps us? Well, as I said before, by knowing about trend contraction, you can avoid extreme losses that comes from trend trading. And you will know exactly where your indicators and trading systems can fail. And by not taking trades in such circumstances, you can indirectly increase your trading returns. So these are the three important benefits of learning about trend contraction. So you will know where exactly most of the traders will lose money, where exactly most of the trend traders will end up making losses. By avoiding to take trades in such circumstances, you can indirectly increase your trading returns. So here is a final conclusion. So when you notice a trend struggling or failing to make new swings, it can be a sign of trend contraction. So whenever you see a trend failing to make a new high or failing to make a new low, or whenever a trend struggles to make further movement in the direction of the trend, you will see it as a sign of a trend contraction. Most often the prices can turn into a range or it can go into consolidation. Most of the traders who follow indicators and trend trading strategies will often get trapped in trend contraction. So by knowing about trend contraction, you can avoid this kind of horrible mistakes. And here is the most important thing. After noticing trend contraction signs, you need to avoid taking trades in the direction of the trend. And if you have any existing positions, you need to close them. Alright, so this is how trend contraction actually works. So this is an important concept. Make sure you keep the lessons in mind. If you want to go through the lessons, please go through the video one more time. And also, if you like this particular content, if you like this particular video, kindly hit on the subscribe button, click on the like button so that we can make more insightful videos just like these. And also one more thing. So you can also receive more insightful real-time market updates and some of the interesting chart analysis and chart updates directly on our Telegram group. So I have left the link of the Telegram group in the description box. Make sure to check it out. Make sure you join the Telegram group so that you can directly get in touch. Alright. So it's all for free of cost. You don't have to pay a single dime for it. So I'm doing it so that other traders can get benefit from that. And that's it, folks. So thanks a lot for watching and have a good day.